Hello, welcome back to my YouTube channel. And in today's video, I would be explaining a sheet which you can use to monitor your business. Let's say within this month of September, we are receiving receivables that we were holding in August. So let's say on the 19th of September, there's a receivables of 10,000 naira received. Here there's a receivables of 3,000 naira received. What it means is we were being owed these figures previously. Now they have been paid back to us. We can't bring them under sales. If you bring them under sales, then you are just changing yourself. Or the guys at the shop just end up cutting away with the money because you are not making provision for it. But this money that you actually provided for here as receivables, when they are received back, they do not add it to the sales. They have to tell you that okay, so person owing us on the 12th of this thing paid back 1,000 naira when it is being paid. And if it is being paid in the same month, okay, let's say this 2,000 naira being owed on the 1st of September was paid back 28th. So you have to receivables received 2,000 naira. At the end of the day, it cancels out each other, but you just have to provide for it. Now, expenses goes from light bill, water bill, any sort of petty expenses in the shop. There will always be petty expenses. So now that is why I added a column for expenses description. You might want to know what the expenses are for. 2,000 naira, okay. Electricity. So expenses description shows you okay, electricity bill, okay, and the height you have 4,000. Okay, this is Loma. Loma is a waste disposing agency here in Lagos. Then let's say expenses here, repairs. Say they had a repair that costed 5,000 naira. Say repairs or any form of expenses, you bring it in here. Okay, let's say water. It's 1,000 naira. Water, but the description makes sure that when you're getting the expenses, there's a particular name attached to the expenses so that you don't get mumbled with a lot of details about expenses. So let me go back to summing. So you have auto sum, then you highlight all, sorry, yes, then you do the same thing here, to sum all, then you do the same thing here, to sum all. Now, okay, this does not have a sum because it's a description. Now I give these columns total colors. So total itself is going to be a green color. Then this is sales, then I'm definitely going to give it a green color. Transfers, I'm going to give it a red color. And that is because do not forget that, okay, sorry, I need something light. Do not forget that these figures is to determine the cash available with your proxy in the shop. Do not forget that. This is not an accounting book for your company. This is to determine the figure with whoever it is you have in your shop. So you are going to be letting transfers. Transfers are not with them. Transfers are in the bank. Then, like I said, transfers are to be confirmed. That's where bank reconciliation sheet comes in, which I'm still going to do. I'm still going to create a video for. If you understand me, I'm still going to create a video for that, but you need to take notes. In this sheet, you are lessing your transfer. That's why I give it a red color. Now receivables to get a red color because they are lessing receivables. Now receivables received gets a green color, and this is because receivables received will be, okay, I don't want something different. Yes, receivable received will be added to the money with them because they've actually received it back. They were being owed before, but the expenses are going to get a red color. Okay, sorry for the color inconsistencies. I'm actually rushing. I'm not picking out the colors the way I should. Now, the cash balance column is going to be addition and subtraction of the figures the way we see them here. So the total sales for the month, we are going to subtract transfers from it, subtract receivables from it, add receivables received, then subtract expenses. This automatically gives you the amount of cash that should be available with your proxy at the shop at the last day of the month. If this does not tally, then there's a problem. Then, like I said, this can be applied to daily. If you have the time, you can do this daily. This gives you the cash balance figure at the end of the day. You can do this weekly. Weekly gives you the cash balance figure at the end of the day. But trust me, this a table like this will actually show you the exact cash that should be on ground with whoever it is at your shop. So at the end of the calculation, there should be 452, sorry, 452,000 cash available at the shop. If the cash available at the end of the day is not equals to this figure, then please, there's a problem with the account. Then you have to check if there are errors in the daily sales, in the transfers, in the receivables, which I would advise you do on a daily basis so that you can be sure that there are no errors. And this can be applied to weekly. Instead of doing for the whole of September, you can do week 1, and you end the at the end of the first week, you end it here and you have your total here so that you can know the cash available at the end of the week. So guys, this is just a template that you can use to monitor your proxies in your small business or your shop. And thank you very much for watching this video. Watch out for our next video, which is going to be on bank reconciliation statement for those of us that use transfer, and we get model up between what is transferred and what is paid in cash. Or you, for the fear of how to keep record, you don't want to use bank transfers. You can make it easy for yourself so that you can be flexible with your customers and also get more customers. So thank you very much. We've come to the end of the video today. Give it a like, thumbs up, and also comment on the video if you have any questions or you really enjoyed the topic or you want us to make any other topic. Thank you very much, and God bless.